Hey guys, it's your boy Yanni here with another market update brought to you by Fast Action Mortgage. We got Chris, my favorite market guru here in the house, to break down a couple topics for you guys today. We're going to talk to you today about a few subjects. The main thing, of course, is the market, along with the new loan limits and just kind of, things that are kind of happening right now in the mortgage business. And then a little article at the end, a little fun article as well. So Chris, I got a lot of stuff written down here, but the main thing is that I want to know, obviously I'm sure the people want to know, is that rates have been coming down sharply. I would say the rates have been coming down sharply in the time I've been in the business. We've seen a good drop. I just dropped a guy's rate by almost a full percentage point just within the month of November. We are now in December, obviously, but just in a month, I almost saw a 1% decrease. There's also, big rumors that the Feds are going to be cutting rates. If you could speak a little bit to that, first of all, the Feds are going to be cutting rates. When do you think they're going to be cutting rates, and are they going to be cutting rates?
Yeah, so historically, 8 months to 10 months after the last hike is when the Fed will cut. The market knows this. They've known this since the beginning of time, since they've been tracking this information. So they're using an average, saying if the last hike was summer, therefore that brings us to March, April, May would be the first cut. The big question is how much of a cut? Mm-hmm. Will it just be small, or will it be a lot? It really depends on how the economy does in the next 3 to 4 months to see how we are by like March.
Okay.
If more people are getting laid off and are on unemployment, and you hear about the unemployment rate, which is coming out Thursday, I believe. So right now the annual unemployment rate is at 3.9%, which historically is not bad, but it's gone up from where we were before. We were at historic lows during Trump and even in the beginning of Biden's term. So if the unemployment rate goes up, that means the economy is getting worse because there's more people that are out of work. They're forecasting we're going to be at 4%, which is a sign of things to come in reference to the economy softening. More people are getting laid off.
Unemployment rate 4%.
Unemployment rate's they're expecting it to be 4% by Thursday, Friday. Mm-hmm. So if the unemployment rate's going up, it means the economy is getting softer. Therefore, they have to start thinking about cutting interest rates to stimulate the economy. That was the only reason they stimulated the economy during COVID, because they thought COVID was going to shut down everything. So they started bringing down the rates. So it's a tool that they have.
But again, all these rumors, but can we afford a rate decrease, or can we afford the Feds to cut rates in terms of inflation? Because from what I understand and everything that I was told is when we cut rates, inflation's going to creep its ugly head back again, and we're going to be kind of headed into that same direction. Well, what do you say to
that inflation rhetoric that you hear is from the 1970s. It's an old model that they used from the 70s that took us into the 80s. So they think because inflation back then came back, so we killed it and it came back, so they had to go harder on the rate hikes at the time. We don't have that economy now, so it doesn't apply, but that's the last time we had substantial, crazy inflation, if you will. We had inflation in the 2000s during the crash, but it wasn't 9% what we got to during COVID. Mm-hmm. So that last time inflation came back, they're afraid. I don't think that they're gonna cut as much as people are forecasting, because they're afraid, the Federal Reserve is afraid that if inflation does come back, it's on them. It's gonna make them look really bad.
Yeah, there was that article, I don't know if you saw it, but it's an article by, I was just talking to you about it right here before we kind of started the ING. ING's saying, they have a crazy rumor saying we're going to be cutting rates 6 times in 2024. I think that's a little bit audacious.
That's extreme, yeah.
It's extreme, whatever, word you want to use, but
let me say something. If they do cut 6 times, it means the economy is in a really bad situation. It means that people are lined up for unemployment, and businesses are going at it, left and right. that's a bad sign if that does happen. And nobody wants that to happen. So nobody should be cheering for 6 rate cuts next year.
Yeah, that's crazy.
That is
That
crazy.
sounded crazy to me when I saw it. And then there's a lot of social media gurus out there, a lot of people you guys might be watching. They're talking about that article and they're promoting that article. I don't see that happening. I'm not the market guru. I'm not. That's why I'm sitting here with Chris, but I'm not the market expert either. But that seems, like I said, a little bit audacious and a little bit far-fetched that we're going to be cutting rates 6 times. Unemployment's, I mean, a little. But you're talking about fractionally high.
Point one.
Yeah, these are small fractions. I don't think this is anything that's really kind of moving the needle. So yeah, that's basically what we got in regards to the rate hikes. But just quickly, I wanted to move on quickly to another subject that is a big subject for all our viewers out there, and which kind of goes back to the rate hikes a little bit, but that's loan limits. Okay, so loan limits have just been announced for conventional loans. They're going to be going up in 2024. In 2023, they were 726,200, I believe. And in 2024, they're going up to 766,500. That's nationwide. That's 5.5% increase over last year. So, I mean, just I guess quickly your thoughts, but in regards to the loan limits, in my opinion, I believe that, prices are going to continue to go up as you see people being able to finance bigger amounts. Home prices keep going up. And to all you people that said, talking about that market crash, unfortunately, it looks like there wasn't really a crash this year. I know a lot of people are like waiting for the crash to buy and stuff like that, but we're not seeing that. We saw 5.5, we saw pockets of a decrease here and there.
Sure.
I know some of my friends in Phoenix, during like March, April, there was some decrease in property value. But anyway, what do you think about the loan limits for 2024? What do you think it means for mortgages in the real estate business, basically?
I think it's going to help a lot of buyers qualify who are at that threshold of outside the limit. Most people know that every county has their own limit. Some counties are higher, some counties are lower. Some counties are called high-cost counties. Orange County, LA, so on,
Parts of the Bay Area.
Parts of the Bay Area, up in Central California. So this is going to help buyers, though, who are, basically think of yourself as you see a house that's right outside the limit that you like. It's going to allow you that extra cushion to make an offer on a house that would have been otherwise not able to qualify. So it's going to help a lot of the buyers that are right there at the limit of the current loan limits. Inflationary, like increasing prices, I don't think so as much as it's going to allow buyers to benefit. So I honestly feel like the buyers are getting the better part of this change.
If you're a first-time home buyer and you're trying to buy a house nationwide, so we're at 766,000, that means you could purchase a $780,000 home with only 3% down as a first-time home buyer. I think that's pretty high, especially nationwide. I mean, I know
very high, yeah.
I mean, here in the Riverside County, San Bernardino, 780 is getting you a pretty nice home still.
Yeah.
I know we're in obviously one of the more expensive areas in the nation, but 780 is a good chunk of change for a house.
It's a good house, yeah.
Yeah, it's a good chunk of change. So you were saying it's not going to basically...
No,
is not gonna,
they've looked at... They have data on this, and it's only short because it's only like 10 years old. They haven't gone back to like the 1970s, 80s for that. But they've shown that the loan limits aren't increasing home prices. What increased the home prices was COVID, because there weren't enough homes for sale when the rates were 2.5, 2.375. So everybody and their moms flooded the market wanting to buy a house. And there was such a small amount of supply. That's not what's going to happen. What's going to happen is it's going to allow buyers who are right at that limit to qualify for a little bit more and give them more options. Honestly, it's going to give them more options. And I think it's really good for buyers to be able to go a little higher if they choose so, because they don't have to if they don't want to, right? But it gives them a little bit more to reach for if they wanted to. When you go from a house, a $20, $30, $40 difference changes the home. It could be another bedroom. It could be a little bit bigger on the square footage, right?
Yeah. Especially when you're amortizing it over 30 years, it's like, $70, it'll change something.
It's going to change
basically.
something. Yeah.
Well, anyway, thank you for that insight. Another topic that I wanted to kind of go over that just got kind of introduced into the news. I'm going to read you something a little here. Basically, it's in regards to trigger leads. If you guys are getting a mortgage and you're going to be working either with one of us or just some other loan officer or mortgage company, and if that mortgage company pulled your credit and you got bombarded with just call after text message of somebody basically either pretending to be your loan officer or whatever the case may be, pretty much telling you they're going to offer you a good deal or a better deal. Those are called trigger leads. And there's been some stuff that's been brewing in Congress, and I know us in the broker community and AIM, our association, has been kind of trying to get together and spend as much money as we can to kind of stop these trigger leads, because they're just kind of bloodsuckers here. And
To explain so trigger leads are your data sold when your credit is ran. So you get the call center guy in the Midwest
Exactly.
that calls you and says, "What's Andrew giving you? Oh, I can give you way lower." And even if they're bait and switching you, they're doing it just to get you over.
yeah, when somebody runs, so like I said, when a guy like Chris or a guy like me runs your credit, these other companies, they're buying data from Experian, TransUnion, Equifax, like the credit bureaus. They're buying your data. And a lot of the stuff in Congress is the fact that this is private data that you guys are purchasing. These mortgage companies, they do have to be, authorized. They got to fill out an application, but it's simple. Once you're a mortgage company, you can kind of buy this stuff. And the CFPB director, Rohit Chopra, testified before U.S. Senate Committee on Banking, addressing the confusion caused by mortgage trigger leads. He acknowledged the complexity of the issue, noting the misconception that initial lenders share this information and express willingness to explore solutions despite the Bureau's limited authority. He said, and I quote, "Because the credit reporting company is really making that information available, you raise the issue of the Fair Credit Reporting Act," which is one of the acts that we follow, "and data on credit reports. We have a lot more of these companies collecting sensitive information, not just what loan you apply for." Trigger lead data can include location information, Chopra said, which has privacy considerations for consumer. And he says that data is increasingly being weaponized. And so we're looking at all these data issues and figuring out how we can make sure to protect the public. So, basically, what do you think Congress is going to do about these trigger leads? I know it's just starting to gain traction, basically.
It's kind of fresh.
It's kind of fresh. It's in the news. It's in the news. Do you think it benefits the consumer to have I'm not going to say their data sold, but to be kind of contacted by, a myriad of mortgage companies, basically? Because in my experience, my clients end up saying, like, what happened? What is all this? My phone is blowing up. What did you do?
It creates a lot of confusion is what it does.
Oh, yeah.
It creates a lot of confusion for buyers who are being fed information from, like I said, a call center guy who just wants to tell them whatever they want to hear to get them to use them. It's very boiler room mindset too when it comes to trigger leads. They teach them to say whatever you got to say to get the deal over, but you're not thinking about the client, because especially when you're buying a home, we have escrows that have timelines. You have dates there's targets, right? You have a 15-day, you have a 25-day, 30-day escrow. If somebody's going to call you and create confusion, all that's going to do is probably jeopardize your escrow on the house that you want,
Yeah.
And all of a sudden you're doubting yourself. You're saying, maybe my loan officer doesn't have the best interest in me. Maybe it's just creating this doubt that's unnecessary during the process. Because when you're in escrow on a home purchase, you only have a fixed amount of time to get it closed. You don't have time to these aren't 50, 100-day escrows to allow confusion to take place. And most of the time I've heard people that will go to the trigger company and they weren't happy with the service, and it's kind of one of those I told you so.
One of those online lenders,
online lenders,
online lenders,
where they're just prioritizing, even if it's $20 less a month or $10, $15, something small it shouldn't be enough for somebody to leave when a purchase is a very hands-on experience.
It is. And a way to avoid, you guys as the consumer, and you guys as our viewers kind of watching this, to avoid a trigger lead or to avoid your credit being sold to the bureaus, remember, ask your loan officer for something called a soft pull. It will avoid all that, and we can pull your credit way deeper into the process, basically at the beginning of escrow, so you can avoid all this like bombardment, especially prior to when you're looking for a home. And that's just a quick tip to help you to let your loan officer know.
Yeah, the other part I was going to say real quick is I've heard this countless times. Oh, I tried calling my loan officer. He's not answering. The call center guys. It's a different experience.
It's way different.
It's different. It's not, we work all day. We work every day. We're available Saturday, Sundays. Those people are not. And real estate doesn't stop after 5 o'clock.
Mm-hmm. Yeah, exactly.
Real estate doesn't stop after 5 o'clock. It's Saturday, Sundays. Real estate still goes on.
Of
People
course.
are making offers. People are looking at homes. So you get what you pay for. And unfortunately, with those types of places, you're not going to get.
Ask my wife. I get calls late. I answer. All right. So I guess just to kind of end it, I wanted to do something fun. I found a really cool article out there, and I want to see how many Chris can guess out of these cities. Okay. So I believe the article is by Forbes, if I'm not mistaken, but. So they listed out the top 10 most expensive cities in the world with their 2023 rankings. Some of the cities are tied, but it's 10 cities. So guys, let's see how many Chris can guess. Chris, what are the top 10 most expensive cities in the world? I'll give you a hint. I want to, just because some of these, they're going to be hard.
Out there, yeah.
They're a little, so let me see here. It looks like a good hint would be that two cities. Oh, actually, no, that's not a good hint. There's two cities in a smaller sized country in Europe. I don't know how. There's two in. Okay, there's. Yeah, I mean, yeah, you could just start firing away here.
In Europe, Stockholm, no.
That's a pretty good guess.
Yeah.
That's actually a really good guess.
I would say Copenhagen.
Yes.
Copenhagen.
Copenhagen comes in at number 8.
8. Let me see. France, Paris.
Paris, number 7.
Paris. London.
London is not on the list.
Not on the list. I would say we'll go in Europe still, huh?
We got a few more in Europe. We actually have one that's involved in a big war right now.
Jerusalem?
No, close.
Or Tel Aviv?
Tel Aviv. Tel Aviv is number 9.
Wow, I would never have guessed that.
Yeah, I would have never guessed it either.
Tel Aviv. What about anything Middle East? Anywhere in the Middle East?
That's as Middle East as you're gonna get.
That's about it.
Yeah, that's pretty much is the Middle East.
I was gonna say like Dubai or something, but what about? We're still in Europe, so I would say maybe.
There's more. Well, you haven't listed. There's the United States also has 3.
3 of them. New York.
New York.
Obviously. What is it? 3, 4th?
New York is number 4.
I would say.
But it's tied with number 3, but it's number 4.
New York or. I don't think LA's on there, is it?
LA's number 6.
Oh, 6. Wow. And there's a third one, you said?
There's another one.
In the U.S.?
San
Diego.
You missed. In California.
Not San Diego?
Not San Diego. It's a pretty obvious one.
San Francisco?
San Francisco.
Oh, wow. So L.A., San Francisco.
You're missing.
And New York.
You're missing 1, 2, and 3, and 5.
Number 1's in the U.S. or Europe?
Number one is a city in Asia. Asia is the continent.
Beijing?
No.
No. Shanghai?
No.
In Asia? In all of Asia?
It's Asia's huge.
Oh man, I don't know.
You're going to go with it?
Yeah, go for it. I don't know. What is it? What's the answer?
All right. Top 10 most expensive cities in the world. Number 1, Singapore.
Singapore.
Number 2, Zurich. Those are the ones you're not going to get.
That one was tough. That's a tough
Number
one.
3, Geneva.
Geneva. That's Switzerland?
The Geneva Convention.
Yeah.
New York, you guessed Hong Kong.
Hong Kong.
Hong Kong was number 5. You said LA, you said Paris, you said Copenhagen, you said Tel Aviv, and you said San Francisco.
Oh, that's wow.
So that was it.
Those Asian ones.
Yeah, that was
What's
it.
the price? What do I get?
But anyway, thank you for playing my little game. And anyway, and thank you guys for joining us today on our little market update. Hopefully you guys can like the video, subscribe on the YouTube channel, and of course let us know if you have any questions or let us know any other content that you kind of want us to put out there. And thank you, Chris.